Oh, yeah. A little bit of background noise there.
Well, good morning. Welcome to the Steel Guys. We haven't been around for a while. It's been a few months since we did our last Steel Guys broadcast live. We've been doing them inside our steelguys.steelrep.com network, and we've decided to go back out and do it in the YouTube and LinkedIn. And let me see here. I'm just checking my LinkedIn as well here as I'm doing this, getting started. As people log in and do that, and if you don't mind typing in your chat, typing in your typing in the chat. Is that coming from me or you? Doing them inside our Steel
recording in progress
network, and we are live. We are live on our YouTube and LinkedIn channels. Good morning. Today our Steel Guys is being sponsored by Sunbelt Steel and Aluminum. It's a space within the Steel Guys network. It's focused on manufacturers' representatives in the steel business, not necessarily just in the steel business, but manufacturers' representatives. And in that space, they talk about what it is to be a manufacturer using a representative or a representative using a manufacturer. It's not biased one way or the other. It's open to help principals find people to sell for them and help the salespeople find principals. So if you're interested in joining that space, you can go to our steelguys.steelrep.com, which is this. You'll land on this landing page that you see on the screen right there. And you can go in the top. Actually, you can scroll through, see what it's all about, all that stuff. And there's a couple plans right now. Normally, the entire network is up for the Steel Guys community. It's $49.99. We do occasionally run specials for a couple free months and things like that, but take a look out for that. But if you're interested in joining the Sunbelt portion of that, you do have access to the community, and you do get access to the Sunbelt manufacturers rep space. Just email myself or my brother Scott, who's bringing in here another steel guy. And our emails on that are Jim Glenn or Scott Glenn at steelrep.com. And all you do is you'll get the link, you'll go in, you'll sign in. In fact, what I'll do here real quickly is I'll sign in. And by the way, we are monitoring this in chats on the YouTube channel, the LinkedIn broadcast, as well as our Zoom meeting. So if you're interested in chatting, asking a question, participating in the dialogue, we are here to actually, what we're here to do is facilitate a conversation about the last week's worth of news in the supply chain of metals. So as you log in here to the Steel Guys, what you're seeing here is a login to the Steel Guys. And this is see these spaces down the left-hand side. The Sunbelt Steel space is the one that's sponsoring today's event. So with that, I will love to bring in Scott Glenn here to say hello. So hello, Scott Glenn.
Hello, everybody. It's been a while. Good to see those of you who are joining in with us today, and those of you maybe coming back to visit with us. Glad to have you along.
Yes, sir. So here we are. Let's get started here and going. What we've got is we run a little update each week on our.
My camera's off a little bit there. Sorry.
No problem. Take that adjustment there. We'll get you right on screen. There you are, right there on the screen. I can actually adjust it a little bit too. If you just stay right where you're at there, I'll bring you over a little bit.
I can't stay in one position very long. I'm kind of fidgety.
ADHD there. Yeah, there you go. All right. Well, we can just kind of do that like that. We'll get it broadcast up a little bit. Probably bring it down a little bit more, but. There we go. Anyway, the way we've got this structured, let me just double check everything. We're live everywhere. We've got it going. We will be monitoring the chats. If something comes in on the chat, what I'll do is I'll throw it up on the screen. I do have this particular screen here that hosts that brings all the chats in from the YouTube, the LinkedIn. In fact, let's just test that real quick. I'll go to the LinkedIn here, and I'll go to the comment section here, and let's see, can I generate a quick
Well, while
comment?
you're doing that, Jim, I'm just going to say, the steel guys, Jim and myself, we've been in the steel industry for a long time. Our father was in the steel industry, and his father was in the steel industry, and we're just trying to build this community and gather like-minded people in the metals supply chain industry, just to get together for a community to chat with. I mean, it's kind of the new technology thing. We're getting it started. We've been doing it for a while now, and we got a little traction going, but we're eagerly looking for people to join in and participate with us. So if you have an interest in speaking out, if you know us and you haven't talked to us in a while, hop on and say hi. If you want to get together and meet with us, we'd love to chat with you. So I just thought I'd throw that in there while you were working with that the chat feature there, Jim.
Yeah, thank you very much. So I guess to kind of get started here, the way we've got the supply chain of metals, the way we think about it or look at it is the beginning. You're mining the ores, the nickels, the iron ores, all the elements that go into the mill steel making process, which then they all dump into that mill category. Is the next level down is your steel mills and the production there, and then from there, it takes and goes out to some sectors, automotive, the construction industries, and then through service centers as well. And then from the service centers, it goes to distributors or fabricators and, purchases to engineering firms that go back to the mills and try to coordinate that kind of stuff. And then eventually it all runs down into the end users, the users of the product. And what we're trying to do here at the Steel Guys is to get everybody in that supply chain networking. And again, there's different factions out there right now that actually do that. But what we've seen is you've got some that are just mill specific or service center specific, or even done with classes and courses online and different places. You travel from here to there to get to a place and spend 3 or 4 days talking about specialty steels or something like that. We're trying to get that all done here in one spot online. And so you can network with other people, not just if you're an end user and you got a question about the mills, you can kind of get in here and find your answer or ask the question and communicate with others that are in that same supply chain. So that's kind of where the concept behind the Steel Guys. And this particular event that we host today is talking about what's happened in the last week. So we're trying to get traction where each week we meet for a little while, we talk about what's going on, and our hope is we're doing this as a webinar this week, but next week, a couple weeks, we might do it like a meeting, so we can all get together and maybe even do it inside the Steel Guys, so it's not a public event. It's more of a private within the network where you come on and we can all get on cameras here and just get to know each other and talk about what's been going on in the metals business and share our knowledge and information, because then it's always changing. Scott and I have been doing, like I said, this inside the network for a couple months now, and from my perspective anyway, I've seen that my knowledge, because we're talking about the same things week to week to week to week, I find myself gaining more and more knowledge. For example, like an iron ore, the pricing of iron ore, I never really paid attention to that before, but because the iron ore and cheaper, and the production capabilities, like in China, their production is going down, but the iron ore consumption is going up. They're buying more iron ore offshore because the global pricing for iron ore was cheaper than them to extract it out of their own mines. So even though their production is going down, their consumption is going up. Their imported consumption anyway.
Yeah.
So, again, so we kind of put that. So, again, we're even seeing that right now. One of the bits of news is China to cut steel output and address overcapacity. Again, that's their output.
I thought that was really interesting when I had heard that recently, that they were going to work on cutting capacity between now and the end of 26, and pretty significantly, actually. Well, it's good to see that they're willing to take that approach to kind of work on the overcapacity within the world, because obviously that was a big factor in the stableness of pricing was just unstable because there was overcapacity. So that's good to see that they're addressing that.
Yes, and so the discussion prompt here that we have to anybody that's out there, again, we're monitoring the chat. So let me make sure that I've got the right monitoring going here so I can see all that stuff. So the question there is, how might China move? How might China's move to ease global ore and steel supply pressures, and what will be the implications for steel makers elsewhere? Interesting. My answer to that kind of, I don't know. I think what is it? And I'm going to round numbers. It's the China hot rolled band pricing is about $400, I believe, and what is the U.S. around 800?
A little bit more, maybe somewhere in that area, 850, somewhere in there. I didn't look at it recently.
Yeah, so I mean, somewhere. I mean, double is what I was somewhere around that neck of the woods. It's double, and it's like, okay, well, one of the reasons for that is the tariffs. You know, so if China
Right.
so if China can ship a $400 a ton thing, and for $200 and get it over for $600, but then you plop a 50% tariff on it, it's a $900 product, so it's not competitive. So again, if they're going to cut their oversupply, that $400 price is going to go to $500 in China, right?
Well, yeah, that as well, but they're not going to have as much to export, which is going to put a little bit of pressure on some of the other capacity to pick up that slack, hopefully.
Well, I don't know. I think it might be an oversupply situation to begin with.
Right. Well, that's true. Yeah, but it seems to be consumed somehow. But yeah.
Yeah, and I don't know what is and again, that's another one of those. On our EDR, we have the capacity, steel making capacity, and we do report. And I forget, maybe moving down into our next section here is that just brings us to the steel mills instead of not just the iron ores and the elements, but now moving into the steel mills. And again, you see that all over the place. What's going on with shuttering of mills in China, or what's India going to do? Are they going to stop sending that excess capacity to India? Therefore, India has to start making more. And so, what the questions that are presented here today are: could Chinese capacity reductions help tilt the balance in favor of Indian steel producers and adjust global pricing?
Again, that's kind of what I was saying. Some of the other areas, instead of that influx of cheap overcapacity steel going into their countries, that's not going to come in there anymore. So they're going to have to maybe not ramp up their production to full capacity, but they're going to have to pick up their capacity somewhere. I mean, maybe not. That's the question. Will it? Your point is, well, we'll see.
So the next discussion,
I think that they will, but
does the aggressive export headwinds? So despite economic softness, domestic softness, Chinese market softness, Bao Steel anticipates China's steel exports to exceed 100 million tons in 2025. Targets include scaling exports to 15 million tons by 2026 and 20 million tons so they're going to scale it down by that, or are they going to scale it to that?
They're going to scale it down by that amount. Is the way I see that. It's about a 15 to 20% reduction over the next year or two.
It looks almost the way it says is targets include scaling exports to 15 million, not from 15 million, but to 15.
Yeah, that's an 85% reduction. Yeah,
correct.
Which, it kind of does look at it. I don't know. That's a good question. That's a significant drop.
Well, and that's what they're saying. That's the global oversupply. By doing that, it'll support the global, the global pricing will increase. And again, right. I mean, that's where the how does that affect the tariffs and what's going to happen with that? And that'll put a lot of pressure on domestic mills if it actually does that. I mean, domestic mills being the U.S. domestic mills, it seems.
Yes.
Because if they're not,
But I mean, there's some mills that have been idled. I think Cliff's idled a couple of their facilities here in June. So there is capacity that can be brought back online. But I think, one of the bigger questions is the demand in the U.S., but that's a different subject, because I think once that picks up, then, things will start to change, but it's pretty lackluster right now. I mean, it's not terrible, but it certainly is on the lower end.
Right, the demand, the supply side demand. Our demand is certainly tailing off. It seems that
I have heard some people talking about 2026 with a lot of the things that have been changing and some of the things that have been implemented, that business looks like it's going to be relatively strong in 26, but that's people talking. I guess we'll have to wait and see how that develops. I hope so.
That's key. I mean, again, part of it, the thing when you talk about strong, pricing can go up and profits can go up, but demand can go down if the global supply, globally, if China adjusts that too. So it can be a better year for some, but not necessarily a banner where you have high prices and high demand at the same time, and globally, again, the global market as well comes in.
Well, and there's also different things that have been going on that, the current administration has made a lot of changes and done a lot of things to bring capacity and manufacturing back into this country. And, I don't think they're going to stop doing that. They're going to keep doing it. And they've made some relatively large announcements. Some large foreign auto plants are going to be built in the United States. Haven't been built yet. They're in the process of building them. But yeah, once those things get completed and they start ramping up production on those kind of things, the consumption is going to grow. As long as the demand for cars is out there, I suppose. I don't think that'll go away.
It bounces around over the millions of units. How many are going to go? Yeah. Again, every so many years, everybody's tariff costs pile pressure on pricing strategies, and sourcing go on a lot too.
At a service center right now, because who knows what the tariffs are going to do? They seem to be stable right now, but based on what's happened over the past 4 to 5 months, I mean, that can change overnight.
Once again, I see that the service centers anyway, they've had to absorb. I mean, either increase their retail pricing or absorb it in their wholesale on tariffs. We've seen this for years and years and years.
Yeah, even with just nickel pricing, surcharge goes up.
Yeah, you see some service centers are going to sell on the price of their material in stock, that they have on their inventory already, and some are going to sell on replacement costs. And the market dictates the pricing, kind of how that works. But you have that always seems to be bouncing around, and so everybody thinks they're just keeping their prices down. They got an overstock on a particular item, and they sell it on current cost rather than replacement cost. Some people are taking this opportunity to reduce their inventories and selling it off of current costs rather than replacement costs, and they get they lower their inventory quicker that way.
Right, and the demand. I mean, economics 101. The demand becomes a big part of that equation as well. If multiple people
were selling replacement costs and to hold to it, and some will sell it off to get rid of the inventory. The end user markets did not have any extra news this week, which is kind of interesting. AI didn't pick anything up, but it does say notably India's metal sector is riding on bullish investor sentiment linked to global changes, but direct new data was limited this week. So the end user market. And the market and pricing trends, as steel prices are holding. So we were kind of going off, I guess, maybe some of those adjustments that have been announced, in the Chinese consumption or the production side. But there's still pressure on the pricing. It seems like there's always pressure on pricing. Peat and sales seem like, yeah. I've never had an order. Good times or bad.
For it to go up or for it to go down.
Yeah. Just, oh, well.
Depends on which side of the equation you're on.
Yeah. Never been easy all along, either way.
Yeah. Yeah. Right. Purchasing agents, they have a tough job, especially in today's marketplace. But I've said that for, I think, just about every year that we've been in business. But it's that crystal ball. Everybody wishes they had that real clear crystal ball, but I don't know if you found one, but I certainly haven't found anybody who has one.
Well, if I do, I'm going to keep it to myself and invest wisely.
Yeah, right, right.
Then I can retire after, I guess anybody that has found the crystal ball probably has retired, or zillionaire. Maybe that's where those zillionaires get. Maybe they bought those crystal balls or something.
Yeah, maybe there's only a few of them out there, and the billionaires have them all.
Yeah, I have that one wish. I wish for a crystal ball.
Yeah, I enjoy what we're doing in the metals business. There's a lot of good people in the metals business. It's a fun business. It's changing over time, and we enjoy it, and we like to be a part of it.
Regulatory environment is the next point we have here in the Chinese policies reshape. Where is that at? Okay. Chinese policies reshape supply outlook. The announcement to prune overcapacity and stabilize several times throughout today's presentation. This may help relieve global oversupply tensions and mitigate developing protectionisms. That's one of those things that I guess those tariffs have been meant to negotiate and mitigate. So broader U.S. tariff strategies.
One thing I was just going to interject here. Sorry to interrupt, but is like how much of that move of the Chinese is being influenced on the current administration's tariff position. We've said this before in some of our previous conversations about, the tariffs. The tariffs are certainly beneficial for some people, and they're going to raise end user costs in the long run. Maybe not. I don't know. It depends. But we've talked about it being really kind of a negotiating tool. And that's where it's going to be interesting to see over the next 6 months to a year where those tariffs, balance out to be. Because is what China is doing on reducing their global or reducing their capacity output for the global benefit, is that relevant to the tariffs? I mean, I don't know. I don't know what your thought is on that.
I think it's directly related to it. I think because that's exactly what the thing is well, they can't sell it over here, so now they have overcapacity. If they can't dump their excess capacity over here, because it's just priced out of the market, then they have to find somebody else. Nobody else's business is booming, so they started finding places dumping steel in India. It's funny. I never quite understood how they could. Again, that tariffs, they're selling excess capacity into India, and India selling over here, and I just never quite understood that it's not arbitrage taking place. So I don't know. That's interesting how, again, that overcapacity, they're just moving tons wherever they can. Now it's to the point we can't do that anymore. We don't have those. We can't sell it for $400 a ton in the U.S. anymore because we have.
Yeah, I think I think the European model has been that way for a long time. Is that they don't set up their capacity and run it full capacity all the time, and just sell it wherever they can, whenever they can. If the demand drops down, they reduce their capacity. And I think that probably about 10, 15 years ago, and I don't know the exact timing on that, but I think that our domestic market has kind of taken that approach a little bit more now based on that, adjusting our output, on the demand, not necessarily just running full boat. I remember at times when years ago when we were selling hot rolled flat material. This is, it's just tons across the mill. You had to keep the mills running to make it profitable. And no matter what the cost was, you had to keep the mills running. So I don't know. That's a whole nother position and a whole nother aspect of the market that I don't know that much about. But I do see that there has been an adjustment made in the U.S. mindset in that area.
Yeah, that goes back to some of the stories we used to hear from our father, watching his father, our grandfather. It was, that's back in the days when the Andrew Carnegies or whatever were, U.S. Steels were blowing and going, the number one producer in the world, etc. And I heard some of those stories telling about how they used to talk about the market and things like that. They were interesting stories. How again, there was so much of the market, who was going to do what, and how they were going to do it. So. But
right. Yeah, it was easier for them. You take this sector, we'll take that sector. It's not that way now.
Yeah, I don't know. Antitrust, I don't know. Who knows? I don't know what happened back then. Wasn't privy to the first-hand information. Oh, what do they call that? Circumstantial or second-hand or yeah,
third hand. Yeah,
third hand. Yeah, third-hand information. All right. Yeah. So the next thing we have here, the opportunities that discuss reduced Chinese capacity could open margin improvement windows for global mills, especially in India. That's good because I don't think here we're really faced with that. That's not going to change because I think we're at the peak here. You've even seen, the tariffs and the pricing went up to a certain level, and then we actually domestically, some of the domestic flat rolled mills a month or so ago started reducing their prices and did so on a weekly basis for a while. So,
yep.
The margins are kind of there and there. Can't do much, unless you increase your price. You're not going to do much with your margins because I don't think the downstream stuff, the elements that are bought, the iron ores and stuff. Again, that's where your margins, the cost of their production, if it goes down, but either that or pricing goes up. Let's see, U.S. dollar denominated export targets create avenues for diversification. That's an interesting point, but I'm not sure. U.S. dollar denominated export targets create avenues for diversification. I don't know where that comes with for the steel business on that. That's an interesting point. If anybody out there has anything to say about that, I'd love to hear it.
So would I.
Improved sentiment from Indian mills rally could spur investment in capacity or value added downstream. Improved sentiment from Indian metals rally. That's interesting because I know that's one of the things we kind of watch in the stainless side of things from the Indian mills to the U.S. market, and how that is. I wonder, and we've talked, a lot of times we're talking about the carbon flat rolled when you talk about that as the base thing, but the stainless business is kind of a secondary to that. However, it doesn't have many tons, but it's certainly got a lot of dollars.
Right, does, yeah.
That are equal to that. So will policy-driven supply cuts in China unlock new opportunities for global mills, or will export expansion undercut that progress? That's a good question. I think we've been talking about that, so I don't know that we can add much to that right now, unless you got something that you can add to that.
I don't have anything really to add. We've kind of talked about it, right? Like you said.
Yeah, where should service centers and end users focus to manage both uncertainty and opportunity? How would they do that? Again, we've seen that the uncertainty and opportunity, you got to keep material coming in. You got to have material on the floor, so you can resell it. But you also have to manage that. That's where, like you said earlier about being a purchasing agent, I don't know that I don't fancy them, but you got to keep enough material on the ground, but you have to keep it at a good cost. You got to keep the flow of material coming in, especially with lead times from foreign sources. Domestic mills, if their lead time, I haven't even looked at lead time on domestic mills on the stainless side of things. Carbon, where are we at in October production for carbon flat?
Yeah, carbon pushed out a week or so. It pushed out a little bit, not significantly, but it has pushed out a little bit. I suppose if you really whined and cried, you could, uh, get some action from the mills. But we don't deal with them directly, so we don't really know that. But on some of the quotes that I've seen, the lead time did go out a little bit. Now, how long will that last? I'm not sure. You know, and
Get
again,
that
it's just one
crystal
of
ball
those
out.
things. They've kind of adjusted the capacity to meet the demand. So, that's one of those things is like, well, push the lead time out, and that makes it look like we have, we're busier. I don't know. The mills have a tendency to play with that a little bit, as everybody does in the marketplace.
Yeah, it comes and goes. I mean, again, that guy, we always say, how can somebody 10,000 tons a month? They buy 10,000, 12,000, 15,000 tons a month. Well, this month they're only going to buy 8,000 tons. Yeah.
Yeah,
And
yeah.
so next month they have to ramp up, get back. It might not even change that much. They just might have bought less this month and they got to buy more next month. It pushes the deliveries out for everybody a little bit.
Well, and that's, just to put a little pitch for the steel guys is that, that's kind of what we want to have as that community, to talk about, hey, what's happening in the marketplace? Do we, do you see some growth in your customer base in the end user marketplace, picking up in the fourth quarter and, first quarter of 26? And if so, people can, get on and chat about that. Certainly no price discussions or anything like that, but to get some sort of an input on, hey, what is the pulse out there in the marketplace? That's what we're trying to develop here is that communication and the community to sit and talk about what's going on out there. You add a whole other aspect of things in there, well, which we haven't even talked about today, but we have in some of our previous conversations is, the cost of containers, coming in from overseas. I don't know what's going on. I haven't even heard anything in the, if the Houthis are still shooting at containers and if they're still running down below the tip of Africa there and coming around and adding 2 weeks. I don't even know. Have you even heard anything about that, Jim?
Nothing's
I
coming up
haven't.
in our
Yeah,
logistics
yeah,
on that side
yeah.
of things.
So yeah.
We
So
do have a
those are
question.
kind of things. If anybody has any input on that, we'd love to hear from you.
We do have a question coming in. What about the impact of tariffs on long products from India and the United States? Are there capacities in the U.S. to cater to that market, to cater to that market, to cater to that market? Are there capacities in the? And I'm going to answer that question. I'm assuming yes. I think a lot of the long products that we see out there, and we've dealt in a lot of those right now. I believe, again, the pricing structure is good, but it's there's not that big advantage. There's got to be a gap between the import pricing and the domestic pricing for the buyer, domestic buyer, to actually wait for the material to come in. I mean, again, in a
Right,
rising
right.
market, it's okay to buy, and in a rising market, but in an unstable market, it's you have to have that margin a little bit deeper. But in a declining market, it's certainly not um,
Right, but
beneficial.
I think the question is not necessarily about pricing. Is it not more about the capacity? Are the domestic manufacturers able to handle the demand for long products in the United States without import product? I mean, did I hear that correctly? Is that the question?
Well, I'll reread it. It says, "What about the impact of tariffs on long products from India into the U.S.? Are there capacities in the USA to cater to the domestic market?
Right. Are
Are
there capacities in the USA to cater? I think there is. I still think there is a need for some import product to fill the demand. Now, India certainly is a place that I think is going to be a big player in the future, just because the current administration has targeted China so hard on all metal products and with tariffs and stuff. I know that you know, I think India is going to be a big player because there's some pretty big hitters in India that are currently supplying into the United States.
Yeah, and I think again we've kind of seen that as well. Some of the sources we have and watched that a little bit. Where I mean, I still think that people there's just that desire, I think, to have a lower cost product. That's the whole big
Sure.
thing because the quality has come up on. I mean, over the years, back in the '80s, or whatever, there seemed to be a little more quality was a bigger issue. And it was a big gap in the pricing, but there was a quality issue. I think we've raised the quality of all imports, and there's probably some suspect countries out there as well, but India is not one of them anymore. Neither is the Chinese. In most cases, I don't think are that problem. The Asian, I should say, Asian suppliers.
Well, there is that level of quality manufacturers and the people that are the lower quality. I mean, in every market, there's that kind of manufacturing tier. But for the most part, I think you're right. There are people who are selling product into the United States out of India right now. Their quality has become acceptable to the U.S. market
Yeah,
just
I
through
guess.
history. Yeah,
Yeah, the big key there is, does it meet spec? Okay, well, there's a range in specifications as well. Not all, there's a plus and minus tolerances and all that stuff. And when you have a tendency to go on the low side or the high side of those tolerances, there's those kind of questions there. And then the second part of that question is the compliancy, like DFARS. Is that country, are the products in that country approved? That's another whole key is just not necessarily their quality. They might have good quality, however, they're not DFARS approved. So,
yeah.
and so a distributor or a service center might not want to stock something that's uh, put out there for.
Well, I mean, do the little reminiscing bit here. Back in the early part of our careers, we saw some. The Japanese started coming into this country, and people didn't want to buy Japanese because the quality wasn't quite there. But after Japan's not even an issue on quality. I mean, they know how to produce material that the U.S. wants. But during that time of trying to figure things out and everything, I remember stories of people getting 316 material that when they ran it to a lab, it was 304. It didn't meet the 316, but that kind of stuff doesn't happen anymore. I think that's been cleaned up. If there is, those mills don't participate in the United States for very long at all.
Has a
Not a
lot to
great
do
deal. Yeah.
the currency exchanges and things like that as well. There's a whole other topic there, and how that influences not just the tariffs but the currencies and the other things. But
Well,
hey,
thank you
that's
for
all
the question. Whoever
yeah.
threw that in, we appreciate that.
I guess came in again. Let me throw it up here on the screen here. The follow up to that. There will be less
Yeah,
issue during the tariff and long products, especially. Correct. I believe that's the domestic pricing has risen to the level of the tariffs. The old import pricing
sure.
plus the tariffs equal new domestic pricing. That's the way I've seen that as well. I mean, they did that, but again, when you talk about carbon flat rolled versus long product stainless, there's a little bit of more wiggle room, I believe, in your stainless products again at a higher price. So there's normally a little more profit margin. It seems like carbon pricing is very slim across the board. It never really grows to huge margins. It's always really tight. That's why when we talk about this, we talk about a 48 wide hot rolled coil being the base of the steel business, right?
Right.
And then you
Right.
add on to that, and everything else, depending on, and you talk about cold rolled, start talking about alloys and stainlesses and things like that go on top of that.
Yeah, and I think that you're going to see as well. The domestic manufacturers in all products are going to probably do that same thing. Is that they're going to raise their pricing as high as they can raise it to fill their mills, but as soon as demand drops off and they need to import pricing and still get orders, because their lead times are shorter and all that kind of stuff. So I mean, yeah, I
You know,
yeah,
and I think that we have seen that in long products dwindle over these in the U.S. to supply the market, and they were bought up, consolidated. Capacities grew with individuals, but they were consolidated, so there's not as many. And even that some of those capacities were old and were shuttered when they were bought out, so those capacities went away. It was replaced probably with some import material somewhere along the way. So, I mean, again, all that market looking at, I would agree. That's
yeah.
the unknown.
Well,
The unknown.
yeah, it's going to be something that's it has kind of hasn't been on the forefront of everybody's mind, at least in the media and Trump. But some good products to offer the United States. So hopefully we can work something out there.
Yes.
Who knows what he'll do? Who knows what he will do?
And with that, that's kind of wrapping it up here today. That's all the questions and comments. We do thank you for participating today. It was a wonderful input. And we're going to be doing this next week again, something to have Sunbelt there. But again, steelguys.steelrep.com is where and if you'd like a link to the Sunbelt space, it's a free link, sponsored. That's why it's sponsored by Sunbelt has paid for a few free memberships. So if you're interested in getting one of those memberships, just email Scott or myself. It's at steelrep.com is our domain name, but it's Jim Glenn and Scott Glenn with two N's on the Glenn. Jim, no spaces, or just Jim Glenn or Scott Glenn. And you don't have to, it's one or the other. It's Jim Glenn at steelrep.com or Scott Glenn at steelrep.com. Make that clear. And we'll send you a link to jump in there and join the network. And in there, there's videos, there's events. We hold events and live events like this inside the network there on a spontaneous basis, and try to network with other individuals in the supply chain of metals, global supply chain of metals. We have close to 100 members right now, and we're looking to grow that to quite a few. So again, thank you very much for joining, anybody that's been joining, and look forward to meeting you guys over there Wednesday, Thursday, Tuesday or Wednesday or Thursday between 10 and 2. Sometimes it's we're going to vary it so every subscribe and it'll notify you for future, schedulings. Same thing on LinkedIn. We do post the events on LinkedIn. You can follow us on LinkedIn. Mine's Jim Glenn III, the third. Jim Glenn III is my profile name, and I was Scott Glenn's just Scott Glenn. He's the president at Sunbelt Steel. You can follow us. We'd love to follow you or even connect with us on LinkedIn. Anything else I can have missed, Scott, you can think of?
No, I think you covered it all. Have specific questions or want to reach out, send us an email or hop on the Steel Guys at steelrep.com.
Sounds good. And with that, thank you. It was an interesting discussion today. We'll see how things change between now and next week.
All right. Everybody have a great day. Thanks.
You too. Thanks, Scott. See you later.
Bye.